Hey, best ever listeners. Welcome back to Unlimited Capital on the Best Ever CRE Network. I'm Richard McGurry, your host. So today I really have a treat for you. I mean, I say this every episode, but today is really a treat. We have Lauren Brychell from Equity Elevated. So Lauren and I go way back. I actually have to credit Lauren with why my firm, Property Llama Capital, is around today. So, you know, early in my career, my partner and I were working as partners at another fund, and that fund had a ton of success. We were a key part of all the marketing and sales. We absolutely crushed it. We raised like 45 million in the first 12 months. And then, we went off and started our own thing. My partner and I, except things really did not go according to plan, I would say. Like, we set conservative goals. I mean, we wanted to do 25 million in our first year, and I think we ended up raising 3 million in the first 2 quarters. And so that was really a moment when, as you can imagine, that was crushing, and that we were really questioning ourselves and whether the business had any validity at all. And like, here was the thing. We had tons of leads. Like, that was our mandate at the other fund, was really like a lot of top of funnel and nurture and everything like that. We had tons of leads, but we were just not able to close. Just can't really explain it. Like, we had no idea what was going on. And then a board member of ours, Byron Elliott from Three Pillars Law, also our attorney, said, you guys should really talk to Lauren. Lauren was formerly ran marketing, or I'm not sure if it was ran marketing, but was a key person over at Spartan Storage, extremely successful self-storage brand. Anyone who goes to the Best Ever conference will know who they are. So she came in. We had her do a kind of analysis, top to bottom audit of everything we were going wrong. And her answer was, you guys have like all the pieces, they're just not assembled correctly. You guys don't have a machine. And, the good news, Best Ever listeners, like, I'll say, so after we hired her, we had a record quarter, the quarter after, where we did, I think like 4 times the sales of the previous quarter. And every quarter since, we've done better, more or less. Like last month was a record month. I mean, the firm is going great. And it was all because we put into place kind of like the machine that she helped us put together. And the good news for you guys is that she's coming out with a book, which is her whole process, because that's what she did. She just implemented her process in her company. And on this interview is a little preview of that, where she talks through her 4 pillars of capital attraction, as she calls it. So everything from top of funnel to how to have the investor conversation and everything. And I'm just giving a personal endorsement here. Lauren really knows what she's talking about. This stuff is absolute gold. And when the book comes out, be on the lead, because that was the key. Like, that was the same with our problem. We had a lot of leads, but we weren't able to close them. Her book, Beyond the Lead, is coming out. All of you guys need to buy it. You all need to listen to this interview. Call Lauren if you need some help in your business. This is total no BS. I owe everything to Lauren, and I'm so glad she came on the show. Good to see you again, Lauren. Welcome to the show.
Thank you. Likewise, Richard.
Yeah. So Lauren and I, Best Ever listeners, we actually go back. I think we started working together about 1.5 years ago, maybe.
Yep.
Yeah. So I would say that we brought Lauren in to Property Llama Capital at a time when we had very high hopes and dreams, but our results in terms of capital raising were not able to hit the plans we had made and the goals we had set for ourselves. And then Lauren was recommended to us by our board member and attorney, Byron Elliott. Shout out Byron, Three Pillars Law. And Lauren came in, quickly diagnosed us, and then found out that like we just had a few tweaks that we needed to make to our systems. Like, one of them was like building a capital raising system procedurally with like our launch sequence, sales follow-up, everything. We were kind of doing that by the seat of our pants at the time. And then I think you worked with us for like 2 months. And then the next quarter, this is not even an exaggeration, I think we like tripled our capital raising. And then since then, building on that foundation, if you look at our capital raised as a business, it's just like up and to the right, kind of continuously record quarters. And then last month we had a record month. So yeah, the audience, Lauren is the real deal here. I've worked with her personally, and you are here because
we are launching a capital raising book.
So yeah, I mean, I think that it's so cool for you to come on here, because like I said, you wrote our playbook, we use that playbook, and now that playbook is available to everybody. So what's the book called?
The book is going to be called Beyond the Lead. And it is going to be a 90-day playbook on how to reconfigure or execute for the first time your capital raise ecosystem.
So what does that mean? Because I would say, like, when I read the title, it made a lot of sense, because what we were good at the time was we had tons of leads. They just weren't converting. And that's like the core theme of this book, right? So tell me more.
Exactly. Yeah. So that's the exact thing, is most people have leads, or they've got some sort of leads coming in, but that's not the issue, right? It's they're not converting enough leads, or not nurturing them properly. They don't have the systems in place to actually get those conversion rates and that capital in the door that they need. So you can get the leads in the door. That's, quote, the easy part, right? But the hard part is actually converting them and turning them into investors and nurturing them well for a long-term relationship, reinvestment, referrals, all of that fun stuff. So the book really talks about setting the foundation. And whether you have leads coming in or not yet, it works for anybody. Setting the foundation, and then it goes into the 4 pillars of capital attraction. So figuring out who your ideal investors are, what that nurture pipeline looks like, the advantage of the relationship and how that looks when you're looking at top of funnel down, and then converting those leads from first impression to active investor. And so it walks through a lot more details than that, but those are sort of the 4 pieces that we focus on. Because the theme that I see with a lot of clients out there is they don't need more leads. They just need to work those leads well.
Yeah.
And so that's the premise.
Yeah. I think that the big change that you made to our systems was fully integrating marketing and sales, versus we were just like telling the sales team, like, hey, are you calling people? You calling people? You calling people? But not, like I said, you built a machine with us in terms of like both sides. So both sides of the aisle, the marketing side and the sales side, in order for that to function, like, it shouldn't be 2 sides of the house. It's one side of the house is how you have to look at it. And that's the way we view it now, is it's like one side of the house. So yeah, go into that.
Sure. Yeah. So it's got to be one side of the house, because they need to be talking to each other. They need to be understanding what's happening. Marketing needs to hear from sales on what the pain points of the investors are, what the buzzwords are, what the key topics of the quarter are that might be out in the news that they're asking about. So tailoring the marketing message there, and then vice versa, whatever marketing is putting out, sales needs to be aware of as well, so they can speak to those points and have fluidity across the board. One thing we talked about a lot with your team too was changing the way that those sales conversations go, especially, tying into the marketing messaging and having those match, right? So one thing I remember we did was a lot of team training. We put together an entire new sales playbook for your team, and we really reconfigured the way that we did investor relations calls, from a new lead, walking them through your software, explaining them to differences, asking about their pain points and their goals, and really just getting to the bottom of what's going to drive a decision on their end. And so we really flipped the switch on that, which I think made a huge difference for your team and your results as well.
Yeah. So I assume that that's basically what you cover in the book as well. I mean, why don't you break down what you call the 4 pillars of capital attraction?
Sure, absolutely. So the first pillar is your ideal investor. And these are going to kind of all come after we set the ground floor of building out that tech stack, which can be a really simple CRM and investor portal to start. So that's like step 1 before we even get into the 4 pillars of attraction, because we don't want to start bringing in leads, spending money elsewhere until we have a great organized place to put them with automation set up that flows into the nurture pipeline and everything else. So step 1 before we even get to those pillars is CRM, investor portal, set it up, invest in it, and get it together before you even start this.
So what's the definition of done for that? Because like I would say, you say that to me and like that's a really high context sentence,
Sure.
where I'm like, yeah, I know exactly what you mean. But
yeah, so done, at least in the context of this, is set up a CRM that you understand how to use, that you're actually willing to use all the time. Because if it's not written down, it's not documented. In my mind, it did not happen, right? An investor conversation, an investor email, a note about an investor and their family for later date when you need to call them back and remember that all of their details, right? So having that CRM organized in a way that you understand it and then you're able to use it. And then having an investor portal that's set up so when you do start raising capital, your investors can log into a really professional interface, securely sign their documents, securely wire funds, have a nice seamless experience when they're coming into you, because that's really going to help build or break that trust off the bat. And ideally, those two systems talk to each other as well. There's a lot of great integrations these days, especially through Zapier, something really simple. A lot of these places websites have open APIs, so you can connect the data and you're not duplicating entries across systems. So that'd be really important. So those would be kind of the main things. And then one step further, which is in the 4 pillars, but automating some sort of drip emails, having forms in your CRM that connect directly to your website so that any lead that comes in is flowing through the system. You're not having to manually enter it. You're not missing data. You're not letting leads drop through the cracks. So that's, baseline what you need.
So that sounds like that's leading into your next pillar, which you said is the nurture pipeline and like drip automations and stuff like that.
Yep. So I start really with the ideal investors. So as you know, a lot of people spray and pray. They market to everyone. They don't hone in their messaging, right? So they need to figure out 1, 2, 3 different avatars and ideal investors that they want to target. So once you figure that out, because you can't spray and pray, because your conversions are going to be lower, you're going to be getting a bunch of junk leads in, you're not going to be attracting the right people that you want to invest with you, right? So that's the first thing. Figure out who those are, figuring out the messaging and the pain points and the buzzwords that are going to resonate with those types of investors. So once you've got that down, then you're ready to start the nurture pipeline. Mm-hmm. Take all that information you have, you figure out where those investors are getting their news, what kinds of articles they might read. Are they on LinkedIn, Facebook, wherever they might be looking for things. And then you start building your funnel out based on that. So top of the funnel will be very wide, lots of different marketing channels with very tailored messaging to those specific people. And then I feel like you want to say something there.
No, you just had me curious because I'm wondering from your experience, how much variety is there in the clients you've worked with and who they're targeting?
There's actually more variety than you'd think. Some people have backgrounds as doctors and they want to target only doctors as their investors because they understand how they talk, their pain points and what they're potentially looking for in an investment. Some people pick 2 or 3 that are totally unrelated, right? And that's okay as long as you differentiate and segment your marketing out for them.
And by that, you mean you're able to identify which of the avatars they are on the way in and then put them on the right drip.
Exactly. And sometimes you can do that automatically off the bat through your different marketing channels from the top of funnel. Sometimes that happens when you start having these conversations and first calls with your investors. That's when you figure out who exactly they are. And then you tag them. Yeah. And then, for example, if you have one avatar that's small family offices and another avatar that are tech professionals, you'll want to tag them separately because you're not going to be wanting to send the family offices.
Totally different.
Yeah. You're not going to be wanting to sending the same emails to both of those avatars. And so it's really important to segment as much as possible to tailor those emails and calls and text messages directly towards them.
And I say it on this show, our avatar is single family landlords, and that we're big champions of active to passive. And what you said really resonated with us because where we've really found traction is we figured out that I'm giving an example for the audience here of like how this could work. Cause like we've continued to figure this out. And then I'd say in the last 11 months, it's really been nailed. And that is that our avatar of a single family landlord is very equity rich and very cash flow poor. Mm-hmm. The problem is that the reason anyone invests in real estate, and this is not going to be a shocker to anyone listening to the show, is that they are sold income. They believe that, owning rentals generates income, except that the reality with a small landlord, I'm not talking about you guys on here that own 20 and 40 unit apartment buildings and think of yourselves as small landlords. I'm talking about mom and pop. They own a single family rental, maybe a duplex, stuff like that. They own a handful of those. So those people, in my case, are usually in their 50s or 60s or older. And so they've built a lot of equity. And the problem is that their cash flow goals very typically are between 100 and 200K. In fact, there's 97%. Of course, you get outliers who say I want $3 million a year in cash flow. And I'm like, okay. But most people very satisfied with between 100 and 200K. However, their portfolios do not match that because the reality of single family rentals is that they are like terrible cash flow vehicles. Unless you're doing an exotic strategy like co-living, but that's not my avatar. And so then what we figured out is that those people need debt funds because it's a pure income investment. And they've done a very good job building their equity, typically sitting on a couple $1 million of, real estate equity. And then we tell them it could be a good idea to transition some of that equity into a debt fund because they're pure income products. And that when they do transition into a debt fund, they're like, wow, suddenly you hit your goals a lot faster than you thought you would. And so that alignment between like avatar, sales messaging, and product that we sell, like finally having that locked in, like complete alignment. I mean, complete alignment on the avatar between their situation, their needs, and the product that we sell them. Totally unlocked. I mean, Lauren, you haven't been here for this. You got us on the journey, and then we've slowly kept figuring it out. But like creating that alignment around the avatar has made it where now just like product flies off the shelf. Like I said, every quarter is a record quarter. Like last month, which we just closed, record month. Stuff like that, because we're like one avatar, one need, understanding them very deeply, having messaging that hits them very specifically on their pain point, which was equity rich and income poor, passive income. And then, hey, here's your solution, and that it's a well-designed solution that they understand, because every real estate investor understands what a hard money fund is. Like they know the product. They know that if you're in first position on a 70% LTV, that's a fairly safe position as far as such things go. So yeah, I just wanted to give an example there of like what alignment in an avatar looks like. And that when we really had that locked in is when just everything becomes dramatically easier.
Yep. You guys have got such a cool tool that real estate investors understand the numbers and the ROI, and you can show them side by side. Here's what you're currently getting in your portfolio, and here's what you could get. And so it's really powerful.
Yeah, and it's like one fund, and you're like, oh yeah, we're gonna like increase your cash flow by 6 times. Like, would you like that?
Yeah, it's a no-brainer.
I'd like to learn more. Yeah. Of course you would.
Yeah. So exactly, having that messaging pinpointed is so important, because imagine if you were talking to those same investors and you were trying to sell them tax benefits in an opportunity zone development project, right?
Yeah,
that wouldn't hit the mark.
We tried. Yeah. No, like you said, it did not hit as hard as just being lined up on like their pain point is income. All real estate investors have an income goal. That is why they started investing in real estate in the first place. Not there yet. Yeah. So what's another example that you've seen? So I explained like great alignment in my business, which we created. So like, what are some examples you've seen in your career with like a different avatar on like really great alignment as a case study?
Yeah. As a case study, one that comes to mind is tech professionals. And so they make a ton of money, right? They are looking for either diversification, or they're looking for some sort of tax advantages, whatever that might be. Yes, the income is great, but they tend to be maybe a little bit more interested in a risk.
Growth.
Growth. They like crypto investments. They're like, well, I could, go to the moon with this crypto investment over here. So why would I invest in your development project? And so it's a lot of, talking about potential advantages for them, is talking about the risk and the opportunity and the excitement around the deal for some of these younger, 30s to 40s tech professionals that have, a very high W-2 income. Even better if they have tax benefits. But that's one that I was working on recently that really came to the forefront. And another thing that they love as well is they love the data. They love the numbers, very tech driven people. So talking to them more about, the cold hard facts, the data, the excitement around the project is going to get them over the fence more than talking about, maybe like the bond market and giving a whole economic spiel around it for those types of people. And so, that's just one that I've been working on the last couple of weeks that kind of comes to mind. But, there are lots of them, dentists and doctors, for example. Dentists are pretty risk adverse, especially even compared to doctors, which is kind of funny that I've seen that trend with some clients. And so they take a long time to build that relationship, and they want to know the numbers, but really they want to be more comfortable with the sponsor, and they are really careful about, dipping their toe in and investing in small increments at a time before they feel comfortable. And so that's kind of an interesting nuance that we've seen across the board with some dentists. And so just knowing those types of things really helps gauge the marketing and what you should be saying in those emails, and if you should be flying and taking them to lunch and spending time face to face with them, or if maybe they're a tech professional and they don't really care about that and they just want to know, hey, what's the data around this, right?
So don't waste my time. We can get on a call.
Exactly. Yep. So just understanding those different nuances is so important. And I've got an avatar cheat sheet that kind of helps walk people through. Yeah. So it kind of starts at the top and goes through probably 20 questions on, okay, who's your avatar? Where do they play? What's their risk tolerance? Where would they be reading publications? What are the buzzwords and the issues that they're trying to fix? And it goes pretty deep. And by the end of it, it really helps clarify if you're, starting off and you're like, gosh, I don't know what my avatar, who they are or what they do. It really helps walk through an exercise that helps target that. And then you can take all that out and extract it and say, okay, this is a lot more clear now. Now I can put this into messaging. Maybe create yourself a custom GPT to help with messaging going forward based on that information. So there's lots of fun ways to spin it once you can sit down and look at it on paper and walk through the questions that will be relevant to figuring that out.
So I have a question. What happens if so my benefit of being a funds of funds guy is that I was able to pivot my product, once we locked it in, and we tried lots of things. We tried value add, tried development, we tried this, and just the fact of the matter for my business is that debt funds are just so dramatically easier to sell. We do 10 times the volume compared to anything else. Mm-hmm. However, what if you weren't a fund of funds guy? And then you did an avatar study of who you thought your avatar was. And then, hey, you're vertically integrated. You're a multifamily guy. What happens if you find out that your avatar is not aligned? What would you tell the client?
Well, I would say, okay, they're not aligned. No problem. Why do you want this avatar specifically? What's the reason that you want to continue to go after this person?
Does that ever happen to you?
Yeah, it has actually.
So what did you do?
The dentist one comes to mind, actually. They were like, gosh, these dentists, they take a lot of time. They're not converting fast enough. It's like, okay, well, why do we want to go after dentists? Can we pivot? And then we ended up pivoting more towards doctors because we realized that there were, for some reason within this client's ecosystem, that was a huge difference between the doctor and the dentist, which was pretty funny to see. But we pivoted. And, an exercise I like to walk through too, if someone's just really I just don't understand. It's not working out. Okay, let's look at your top 5, 10 best investors. The ones that you either A, love working with, or B, that invest the most amount of capital, or some mix thereof. And what are they? What kind of avatars are they? Let's go find more of those because those seem to be a great fit. And let's pivot and look somewhere else that is working instead of going after someone who you thought might work and that just isn't panning out.
So I would ask, how long does that pivot take? Because obviously that could be, if it was a really expensive and 4-month project, that would be a disaster.
Right. Yeah. Having leads come in organically and finding new events and finding new pockets where you can find those new types of folks does take a while. It's not an overnight thing. Even if you were to go out and say, okay, I'll spend $20,000 this month on meta ads. Yes, you'll have some folks come in, but it's not going to be, it's going to be more of a long-term project. It could take 6 to 12 months to really start building that pipeline out and getting consistent leads in the door within that avatar. So that's why I always like to say, raise capital before you need to raise the capital. Investors can tell you when you're scrambling, it's very stressful to scramble. So start and give yourself a massive runway before you actually need it to close a project.
Yeah, they can smell fear.
Yes.
You don't want that. So what does that mean to you? Because I've talked to, well, obviously I interview a lot of capital raisers on the show. That's not a surprise. That's a very common piece of advice, which is raise the capital before you need it. But what specifically does that mean to you? And what does that mean in practice? I'll use another term. What's the definition of done on that, on raise capital before you need to?
So it really, to me, it just means start going out and building relationships with potential investors long in advance before you pitch them a project. So, I'm sure you've heard a million times, don't pitch a deal on the first call, maybe not even the second call, right? So that's really true in practice. Ideally, you'll have plenty of time to go to events, network around town, go to those real estate meetups in your area, start meeting people and start building your list of potentially interested partners earlier than you need it. So then you can really keep in touch with them, see them at events 3, 4, 5 months in a row, check in on them. How's your family vacation going? That type of thing before you even send them a marketing email of, hey, we got a new deal. That's what I would do if I were, raising capital in the next 6 months is I would start going out and building my list now, getting some people warmed up, nurtured, maybe taking to lunch. Again, no pressure. I don't have a deal open. We're just hanging out, getting to know each other, building that trust. And
so
then
Hunter Thompson gives that advice too. Because I've taken the Raise Masters course and some of his other stuff.
Yeah.
He's like part of his opening call script, which I would say we don't use. And I'm not saying that it's wrong. We don't use that. But that he's like, he says, and it sounds like you're saying, that saying I don't have a deal is actually a key part of the intro call.
Well, if I had a deal, I wouldn't say that I don't have a deal, but I wouldn't necessarily say, hey, John, how's it going? Let me tell you about my new raise.
Pitch hard.
Yeah, I would not pitch hard from the first. You can absolutely, they'll probably know you have a deal, right? They've come off, if they're coming in from your website, for example, they're going to see the deal on your website. The first call, say, hey, I'm actually potentially interested in that deal. I probably won't talk about the deal unless they ask me specific questions on it. I'll get to know them. I'll ask open-ended questions, really let them do most of the talking. Maybe I'll send them a follow-up, piece of collateral or two, and then say, hey, you know what? We've got this deal room, invite them there. They can poke around. Then on the next call or two, I'll follow up and ask pointed questions if they poked around any specific deals or things like that. But if I have a deal, I'm not going to say, no, I don't have a deal, but I'm not necessarily going to market it and be super open about it in the first 5 minutes of the intro call.
Yeah. So why don't you go into that? What does a good intro call look like? I mean, you gave a little bit of detail, but I'm fishing here because you wrote our intro call script,
Sure.
and I know what's on it and it's really effective. So,
Yeah.
I mean, if you wouldn't mind sharing.
Sure. Absolutely. And I also put together kind of an intro call questionnaire that people can go through while they're going through the call so they don't forget to ask the important questions. Happy to share that as well afterwards. Or
you could buy the book.
Yeah, or you could buy the book. It's out soon. So, essentially the point of that first intro call is to build trust, build some sort of relationship, understand what the investor is looking for, see if you are a good fit for them and vice versa, and really just let them do the talking because subconsciously people love to talk about themselves. That helps build trust. And so you're going to continue to ask open-ended questions such as, tell me about your investing experience. What has been your favorite investment? Why are you looking to pivot? Tell me about your diversification strategy. Maybe even ask things like, what do you think about the market these days? Do you think we're going to go into recession or not? Or just get them talking and get them kind of understand where they're coming from, what their experience has been, and then you can tailor questions after that to them, right? So for example, my favorite, example to use is you don't know exactly who you're talking to if it's like a lead that came up on your website, booked a call with you until you get on the phone with them. Maybe not in your case, you've got more data on them than most people do, but
we still do.
Sure. Yeah. So you don't know if they've been investing for 20 years, if this is their first passive investment opportunity, if they have active rentals, whatever it is. So we need to understand that. And then we need to tailor the conversation to that because the last thing you want to do is explain what an IRR is to someone who's been investing for 20 years. But you're not going to know that unless you ask the right questions. And so that's a big part of it too, is just understanding and training the team on how to answer things on the fly and not stick to a script, not stick to the 8 questions that you should be asking on that first call, but feel it out and use a lot of context clues there on, what's going to build the most trust and get this investor to start liking me from, for the first 30-minute conversation.
I think that there's 2 objectives to a discovery call in terms of knowing if it was a success or failure. And actually, my call recording software, I use Fathom. I think I saw that you're a Fathom person too.
Mm-hmm.
Yeah. So it has, while you're on the call, a little bar called talk time that shows up in the widget on the screen. And your goal is to keep talk time, it's you as the rep, is to keep talk time under 20% for sure. Because especially if you haven't undergone sales theory training, especially modern sales theory, it's really all about getting the customer to explain to you. And here's part 2. So number 1 is keeping your talk time under 20% for a discovery call, at least.
Yep.
And then number 2 is they need to tell you why they want to buy your product in their own words. And you leave them there with probing questions. And like, if anyone's familiar with like 5 whys analysis, you're like, why do you like real estate? Well, I like real estate because I like financial freedom. Why do you like financial freedom? Or like, what's that mean to you? Oh, it means being able to control my own time. But really, what is it like? What would change if you were financially free? Oh, I'd be able to like spend more time with my children. Now you're getting to like real emotional core stuff.
Mhm.
and that they need to explain to you in detail why they want to buy your product. Sorry, do you have anything to
Yes.
add to that? I just monologued.
No, you're exactly right. And there's so many different types of sales training out there. So I like to take bits and pieces from each. So I think that's a great one. I think one that I've used in a past role was trying to get them to say yes as many times as possible, because that
The yes ladder.
subconsciously, yes, exactly. The yes
Yeah.
ladder. Are you a real estate investor? Yes. Are you looking to invest this year? Yes. So that kind of helps build that trust. So yeah, I think the most important thing though is keep your talking low. Ask those great questions so you get as much information on them as possible in the first call. And then you can tailor every conversation, every message, every follow-up after that. If they say, yeah, I'm looking to invest in real estate sometime this year, it's not going to make sense for you to come back the next week and say, oh, I've got this great deal, it's closing soon. Like, that's not matching exactly the time frame that they've given you. And now you look kind of desperate. They're like, gosh, did they even understand me? Did they even listen to what I was saying on that last call? So, taking those notes and not being too pushy when they say, I'm just checking you guys out. Like, I'm not investing this month. So don't push it, because that's going to kill the trust and kill any potential capital probably pretty quickly. So
yeah, we're on the verge of bringing someone in who we've been working on for 2.5 years.
There you go. Exactly.
Yeah,
It's a long game.
You gotta be paid. Well, and here's the thing: is it was someone who 2.5 years ago, when we were selling a multifamily deal, great multifamily deal, doing amazing, I would add. Like, it's gone great, but she's like, I'm really more interested in debt right now. And then we finally brought her all the way around, and like, we weren't pushy because she told us, she's like, oh, I'm not interested in equity at the moment, not interested. And then we finally brought her around of saying, hey, we've got a great debt fund, and you told us that you wanted to do debt funds. And she's dipping the toe in the water. That's another nice thing about debt funds, which I would continue to sell to the audience, is that they're always open. That's a really huge advantage of a debt fund, is that you can be like, it's not like you're losing money by them giving you a small amount, because if you give them a small amount and you pay your distributions, more often than not, that turns into a much larger position over time. Huge advantage of a debt fund, in my opinion. I just want to reiterate to the audience, if you have not gone through sales training, you will get on a sales call and you will just start running at the mouth, like, because you're nervous and you want to look smart. And I'm literally just talking about myself here, of like how I sell when I'm nervous, is that I get on and I just talk and talk and talk, and I'm the greatest thing ever. And here's what I think about real estate. And like, oh, the reason my project is great is because of X, Y, and Z. And here's our theory. That is not how you close deals. It's not. The way that you close deals is you need the other person to like you. And the way the other people just start to like you, if you ask personal questions about them and you show general interest and you let them explain to you why they want to buy your product. I just wanted to like reiterate that for the last time, because it is so counter to human nature and requires so much practice to have that kind of patience. But I'd say the reward comes when you see it work for the first time and you realize like it's actually really easy, because people just want to talk about themselves.
Yeah,
Exactly. And so like, it's actually quite easy. You just have to see it work a few times, and then your brain wants to interject and wants to, like, every time they tell you a story, you want to be like, whoa, well, I have a cool story like that too. And no, you have to just shut up.
Yeah, literally though.
Yeah. So that's our sales training on unlimited capital. So I think you were kind of getting into the relationship. Is there more to were we talking about the relationship advantage pillar, or did that mean something else? The third and fourth?
No, I mean, that's a big piece of it. The relationship, having that first call. And then when you're nurturing them, again, those notes from that first call are going to carry through for the next 3, 5, 10 years, right? It's important to remember their wife and kid's name, or if it's, or their husband and kids' names, whatever, their dog's name, if they like to travel, where they live. All of these little bits and pieces of information that you get on every single time you talk to them build up to that holistic relationship advantage, showing that you care, showing that you listen, showing that they're important to you and they're not just a number. Because that's another reason that, these investors have a little bit, especially when you're looking at your average retail investor, they've got a little bit more of an emotional, personal connection to these investments than just looking at the straight data and the returns, right? And so that's going to be a really important piece. And another piece to that relationship advantage is just don't forget to nurture them, whether they've already invested, whether they haven't yet, whether they've invested in 10 of your deals, whatever it is, nurture them the way that you would nurture your top investor every single time. And that's going to help increase investments, reinvestment rates, referrals from their friends and family, it's just really important to continue to build that relationship throughout the years. A lot of people forget to do that once the capital's in the door. They're busy running the deal. They never call their investor back until either A, the investor calls them, hey, what's going on? I haven't heard from you in a while. B, where's my K1? Something like that. Or C, hey, we've got a new deal. You want to invest? And so that's not the right way to approach that.
So what is the right way?
I mean, quarterly is ideal if you can do it, right?
You just ring them up?
Yeah, ring them up, email them, text them, however they like to be communicated with, have lunch with them. If they're, local to you or you're traveling to their city, try to touch your investors some way every quarter if you can, whether it's a simple text, hey, thinking about you, just flew through your city, hope you're doing well, let's catch up next time.
I had a dream about you last night.
Sure. If you're really close with your investors, go for that.
Yeah.
So yeah, maybe I had a dream that our investment went 10x and we're doing well.
Yeah. Okay. And then what is the fourth pillar, the first impressions that convert?
Yeah. So that kind of goes back and ties it all in and talks a little bit more again to why that first impression is important, whether it's through your website, whether it's through your pitch deck and how those should be really tidied up and neat. Obviously, that's not the foundation of the CRM and the portal, right? You have to wait till you have a deal. You've got to put the, website takes a while. So that's kind of that last piece of when your investors are out and about and they're seeing you organically or potential investors are seeing you organically, what are those first impressions going to be? Do you have grammatical errors on your pitch deck? Is your booth at a conference just have coffee stains on it, right? So all those little bits and pieces that add up to gosh, these guys don't seem like they have their stuff together, or, oh, they're a little bit disorganized. I wonder if that's going to flow into the way that they operate this project. All of those things add up into first impressions wherever they might see you. And so that chapter talks a lot about that, being really neat and tidy and why it takes a lot of effort but why it's important for, assuming you're going to want to grow and scale and bring more leads in, you're going to spray your name and your brand everywhere. You don't know where those first impressions are going to come from. So having a holistic, great, best foot forward everywhere is an important piece of that. So that's kind of what that talks about.
So I'd say like a final thing I'd like to ask you about. It's not one of these pillars, but like, what is the top of funnel that's working today? And because you've kind of hit on a couple, but let's kind of like go through the classic generic strategy. Sorry, that's a marketing technical term. So generic strategy means something like Facebook ads, this. Like, what do you see that's really working today? And like, what do you think is not working today?
Yeah, great question. So something that's working today that I have always been a huge fan of, and I will probably never not be a huge fan of, is in-person events, traveling to the conferences, going to the meetups, hosting a dinner, hosting a property tour, whatever it is, even if you have a small group of investors, have them all bring a friend, have them all bring a family member who might potentially be interested in learning more. No pressure sales, just an educational thing. So whatever you can do in person is always going to be the best. You're going to convert those investors quicker. They're going to build that relationship quicker. So that's my number one.
How do you scale that though? Because that's where we've had trouble. Like I totally agree with you that for us, our in-person events are highest ROI, raise huge amounts of capital. But the problem I found, and you probably have the answer, is that you can't like run an in-person event every week, or at least we haven't figured out how to.
Yeah. You got to hire someone who's in charge of that. I used to travel every single week almost as an IR person raising capital. And we had 2 or 3 of us that would go around the country to different events. So as you can grow and scale your team, they can be road warriors, right? Especially people who are extroverts, they're salespeople. They love that kind of stuff. They thrive off of that. And so just finding the people for that would be the way. It's tough to give up that control, especially as the name and the face of the brand, right? You're the one who wants to be at all these events. Chris wants to be at all these events, right? Because that's who people know. But giving up some of that control and saying, okay, now Lauren's going to come in and she's going to be our face of capital and she's going to go out and meet everyone. And that's just kind of the way it has to transition if you want to grow and scale that to a weekly, bi-weekly thing.
So are there like conferences every week or what are you?
There are a lot of conferences. You would be surprised. I wouldn't say there's conference every week. You could probably find one a month if you wanted to go to them. Okay. I like to switch up between conferences, small curated investor events. the more you talk to your investors, the more you build that relationship and trust, you'll be surprised. They might invite you out to speak to 20 of their friends in their city, right? So those types of things you can put together. Dinners. It's always great to look at, okay, where do my investors live? Another piece of information that's really important to get. So where are there 5 or more investors? I'm going to fly there this week. I'm going to have lunch with them. Yeah, I'm 5 or more. It can be small to be effective, right? Again, ask them to bring a friend or family member. Ask them if they have anyone else in the area that would be interested in joining. And then you can double your number potentially. And so that's always been a great ROI, especially when they feel special. You're coming, you're flying to them, you're taking them out for lunch, dinner, coffee, whatever it is. And you're just getting that FaceTime. That is such a huge thing. And so that's something I've done a lot. If you know an investor, a big investor especially, likes to go play golf, fly to them, take them golfing at a really cool course near them, things like that. So you can find an excuse to go somewhere every single week if you wanted to. Even if it's small scale, not a huge conference.
So there's events, and then you were going to move on to
events. I think there is still something to be said about being an expert in your asset class and putting out content online. That's a little bit less cost. It's scalable. You can, for example, record one webinar and turn that into an email, a YouTube video, Instagram short, put that as a blog on LinkedIn or an article on LinkedIn. So you could recreate a lot of different content into different things, and just that is something that you can pray a little bit more on, okay, let's just blast this thing everywhere digitally that we can. I think that's still great. People are still, reading LinkedIn articles, watching YouTube videos, trying to learn. Put those on the forums that you can as well that are free. Maybe something like a Passive Pockets if you're a member there, or all kinds of Facebook groups that you can add value to and post in there and start building a name and brand around what you're doing.
Well, I think you're hitting on something I'd like to emphasize for the audience. Is I heard a rule of thumb that if you create content, you put 3 times more effort into distributing the content than creating the content. And that's kind of something you were getting at.
Right. Exactly. Yeah. That's a great, way to look at it. And if you're already creating it once, get it everywhere you possibly can.
Yeah. So it's Facebook groups, LinkedIn posts, everything. Yeah.
I mean, same with events. If you want to look at that quickly, a lot of people don't post their events on Eventbrite or a meetup.com and a Facebook event and a LinkedIn event, and even go one step further and boost those events to a specific targeted market or targeted audience in that market. That's, a great way to potentially pick up a couple of folks that are not in your ecosystem yet, that are still looking around for things like that wherever you're going to be hosting. So
it's funny you mentioned this, and this may transition to a third one, and I'm kind of forcing the transition here, is the cheapest Facebook leads I ever got were promoting a local event.
Yep.
And they seem very qualified. Here's the thing though, they of course had like a 2% show up rate, but I still got the email address.
Right. Yeah, you never know. They might convert a year later. You literally just
they're
know.
on the list. But I mean, they were like solid leads, and I think I was at like $7 a lead or something like that, which is real good.
Yeah.
So what's going on in paid media? This is probably what everyone's going to want to know.
Yeah. Paid media is an interesting one. I've got probably half my clients doing it, half my clients not doing it. It can be saturated and it can be expensive. So I think you really need to A, hire a firm that really knows what they're doing, or B, just really know what you're doing while you're building these ads, or you're just going to waste money.
Well, I think even if you do know what you're doing, you're going to spend a lot of money before you see an ROI.
Yeah. It's funny though. I did put an ad up this week and it was like a $3 cost per lead, which is the lowest I've like literally ever seen. And I was like, whoa, what happened here? And of course, only like 1 in 10 of those leads will be any good, but you're like, oh,
and then 1 in 10 of those will invest. Yeah.
Right. So it's definitely a long game of, okay, this is a strategy that is something great to add. Some people do 20 grand a month. Some people do $1,000 a month. Tailor it to your budget, however you want. I think it is a good strategy in some aspect. But this is going to take a lot of time. So if you don't have the team or the systems in place to nurture these leads, don't bother, because it's just going to be a waste.
So I want to expand on what you were saying there.
Mm-hmm.
The paid ad marketplace is by definition extremely competitive. Like just by definition, it's an auction, and that the way these platforms work is if someone has engaged in one real estate ad, Facebook is going to show them like 30 of your competitors, and they're probably going to engage with all those too, which means you have a lead in your system, which is being highly competed for. and that the way that you're going to win is you have to be like best in class all the way down your funnel. You know, you have to have, obviously the ad has to be dialed in terms of your cost per lead and are you competitive there? Then you have to have absolutely A+ email. Then you have to have absolutely A+ sales. Then you have to be totally dialed in your entire funnel to win in paid media. Am I correct in that? That's my assessment.
100%. 100% correct. Because this is actually something that's interesting. I'll plug really quick. I started a lead call setter system, company earlier this year. And sometimes, we have a couple clients, they'll get the exact same lead in the door within 5 minutes. And so we'll be calling both of them, right? So if you don't have somebody calling, right? It is kind of funny sometimes. You're like, oh, I wonder if they're going to recognize my voice,
Yeah.
But if you don't have someone calling and you don't have an automated drip system set up on top of that, and you're not only just calling once, you're calling a lot of times, probably 6-7 times, that lead is gone. They're going to the next guy who did call 6-7 times, send out the proper emails that hit them, did the proper CTAs, all that kind of stuff, had the nice website and the nice pitch deck. And so if you don't start those paid ads unless you have the proper system and teams to do it. I mean, usually if you're spending a good chunk of money on ads, you could be getting in 10 to 15 plus leads a day, and you've got to have someone call them every single day for 7 days plus, and then all the new ones on top of that. So it could be a full part to full-time job for somebody.
Yeah. Yeah. Okay. What is, I totally agree with everything you say. And I'll kind of editorialize here and say that paid ads are probably not a good fit for most firms.
Yes,
just because you have to just be so dialed in. I mean, in terms of, you got to have a full marketing and sales department. Like your marketing budget has to be hundreds of thousands, if not close to $1 million a year, to even like have the infrastructure to execute on a paid ad strategy, and also be able to invest in the payback period, of saying like, I'm going to spend $50K on ads before I even find one that works. That's the game.
It is. Yeah.
So then what is a good top of funnel then for someone who isn't in that position to be burning, $50,000, hoping that something could work or could not?
Yeah. I think other than the events and just being a road warrior and getting out there and then doing as much online content as you can for a lower budget, I think joining podcasts and writing articles is another great way to go. You can sometimes get on Yahoo Finance or some of those larger platforms for lower cost, just depending on what kind of articles they're looking for and who as your PR person, right? And so that's a great way to do it. And of course, that gives you nice clout as well. You can say
put it on your website.
Yahoo Finance, yeah, exactly. Put it on your website. So that's a good one. And then podcasts. Podcasts are free, right? As long as you have an interesting story and something to say and a value to add. There are no shortage of podcasts to join, and that's a great way to get leads. I've had a ton of investors come in through podcasts they've seen me on, or clients and things like that. So that's lower cost. You get to do it from home. Great way to build that top of funnel as well.
What do you think about LinkedIn DM outreach? I was actually that's conspicuously missing from everything that you've just recommended.
Yeah. I don't know how I feel about that. I feel like so many people do it so poorly. I think there's a way to do it well, and especially with Sales Nav and other platforms like Expandy that can help automate a lot of this. I think there's a good way to do it. I've dipped my toe in it, but I don't know about you, but my LinkedIn feed recently is mostly just GPs and other GPs hanging out and chatting and commenting on each other's photos. There's not a lot of investor engagement within that. And so I know the investors are out there, and I know people have had success with that, but that's not my go-to strategy to start off with. I prefer building a brand through educational content. I think when you have your name and face and everything else out there and your other pieces at the top of funnel are well, people are going to come to you.
Yeah.
Everything gets easier. People are going to come to you. If you're doing DMs that seem a little desperate, or you're even remotely pitching a deal off the bat, that lead's probably not going to invest with you. So it's tough. A lot of people don't do it well. And so I kind of just try to stay away from it until it makes sense.
Okay.
Yeah.
Very cool. So I'd say if there was
probably isn't a very popular opinion, but
well, no, I would say that I agree with it. I think to distill that, like, don't just get on, like, I talked to a guy recently. I was like, what's your LinkedIn? He told me his strategy. My strategy is I hired a person in the Philippines to send people messages on LinkedIn. How's it going? Not well. Right. I was like, okay. And I tried not to offend him. I was like, sounds a little half-baked. I think you should stop doing that. And so like you shouldn't do really any strategy without having a really well thought out plan and understanding the channel and understanding how it works. That like just spraying and playing on LinkedIn is not going to work. Like it's not, exactly. I would say the medium, which is the most forgiving, in my opinion, and I want to see if you agree, that if you are a new GP, and this is generic advice that you've heard a million times, nonetheless it is true, you should probably start creating some content.
Yes.
Like one, because you will get better at it over time. No one sees your bad stuff because you have no distribution when you start. You'll figure it out over time, and that there's almost no such thing unless you're just truly inept of like creating an anti-sales piece of content. Any content is better than no content. Yeah.
Well, and the beauty of it too is you can pick and choose the type of content you want to create. If you hate YouTube videos, don't go on YouTube, right? You can pick, I always say, pick 2 or 3 that you enjoy and you'll consistently do. I think that's a key to it too. Be consistent with it. So if you like doing LinkedIn posts and then you like hosting a webinar once a month and you write really great articles, okay, fine. Stick to those 3 things and then blast those everywhere you can. Don't do things you're not comfortable with. Don't do things you don't like, you're not going to keep on top of. So that's where I would give some advice there. But that's an easy way. And you can outsource some of that. I always say put your eyes on it before you send it out, but you can outsource some of that content creation, which makes it easier on you. And there are a lot of firms that will help with that these days.
Oh, there are a lot of content firms these days.
Yeah.
Cool. Well, so any idea when the book comes out?
Yeah, it should be coming out in the next month or so. So you'll be the first to get a signed copy, as I promised.
I pre-negotiated that as a term for doing this interview. Full disclosure. Yes. Yeah, I have to disclose. I got a free book out of this. Yes. I would have had you on anyways. That was totally tongue-in-cheek for the record. So yeah. Okay.
Hopefully in about a month. I'll definitely keep my LinkedIn network ahead of the curve on that one.
So, yeah, you crush on LinkedIn, by the way. So where can people find you?
Yeah, LinkedIn, Lauren Brychell or Equity Elevated is my website or my LinkedIn, and that's where I'm most active.
Very good. Well, thank you for coming on, Lauren. This is
great.
You,
Richard.
I knew it would be great. I will give a personal endorsement from Richard. Lauren really knows what she's talking about, delivers results for her clients. And I truly cannot wait to read the book. Absolutely.
Hope you love it. Yeah. Well, thank you so much.
See you later, Lauren.
See ya.